Hello traders, welcome to SammybrainFx. So in today's video we are going to be looking at market structure and SMC entry model. So market structure and SMC trading model. If you're new to our channel, please do well to subscribe and like our videos to continue receiving updates from us. Okay, without further ado, let's dive in. So looking at the chart before us, this is volatility 100 1x index. Okay, this is 1 hour time frame. Let's go to our 4 hours time frame for higher time frame. So looking at what we're having on the chart, price has been going up. It's been an uptrend. Okay, upward movement lately. So we saw something. We saw this break of structure to the upside, retracement, break of structure, retracement. There's no break of structure, but retracement, break of structure. After this break of structure, instead of a retracement to have another break of structure, we have a break of structure to the downside, a change of character. Okay, so having seen this, we are looking at the price for price to tap into the zone and then sell. Likely that's what we are looking for because of this. So price did not create after a year, price did not break a high to retrace to continue. If this had happened, we would have been expecting the price to go up further, but rather we saw this break to the downside. We saw this break of structure to the downside. So we're looking at price entering here and look at for a sale. Okay, that's actually our bias. So let's go down to a lower time frame. So let's come down to our 2 hours time frame. Coming down to our 2 hours time frame, so we see what we're talking about clearly. We saw that after price came in, there was a break of structure here to the downside, a break of structure here. So we're waiting for price to come in into this zone before it sells. So that's actually what we are looking at for. But before we do that, since we're expecting price to come in before it sells, we can take advantage of buy here. So how do they do that? So coming down to a 1 hour time frame, if we come down to our 1 hour time frame, so we see that here there's a break of structure here to the upside. There is a break of structure here to the upside caused by this zone. This zone caused the break of structure. This zone right here caused the break of structure. So we saw this zone caused the break of structure. Now this other block, to be precise, this other block, this is the other block that caused the break of structure. So now which the other block is this last down candle that was formed before this impulsive move that broke structure. So there's a break of structure here, so call this break of structure, break of structure. So this break of structure here caused by this particular candle. Okay, so having seen this break of structure, so we're expecting price to tap in before it goes up. Remember, this is our zone, this is our target. We are targeting price to come into this zone and we likely look at for a sale. That's actually our main focus, but we said while waiting for that, we can take advantage of this upward movement, which is exactly what we did. Okay, so price has come in and has tapped into our zone. So having tapped in our zone in a 1 hour time frame, so we'll go down to our 15-minute time frame. So to look at for our entry model. So our entry model, we can always look at for that the 15-minute time frame, 10-minute time frame, or 5-minute time frame. So let's go to our 15-minute time frame first to see if we can spot out any entry model. So coming down to our 15-minute time frame, the 15-minute time frame. So what did we see? We saw that price came in and tapped into our zone. After price tapped into our zone, okay, normally this is our model. Always wait for price to come, tap into our zone, break structure, retracement to that our zone before we buy. So this is actually what we always look at for. This is our model. Alright, so these are actually our model. So we're waiting for this to happen, which it's actually happened here. So price came in, it tapped into our zone, price came in and tapped into our zone and did this. We saw a break of structure, and then waited for a retracement before we buy. But you see, after this breakout, where is the breakout structure? This is the breakout structure. We saw the breakout structure here. Let me take this out. We saw this breakout structure, and this is the zone that caused the breakout structure here. This zone caused the breakout structure, this particular candle. So we'd have waited for price to come in. Would have waited for price to come in. Would have waited for price to come in, tap into this zone for it to buy, but that did not hold. It got violated, so it took us out see if we had entered here. Okay, but we saw something very significant, something much more that gave us a much more confirmation. So what did we see after price came in and tapped into the zone, consolidated a bit and did this movement? We saw that there was liquidity grabs. Yeah, all those lows were taken out by this new low. It took out all these lows. There was liquidity grabs. Okay, after this liquidity grab, we saw this liquidity grab. We saw that the breakout structure to the upside. Okay, so this structure was broken, caused by this candle right here, this zone, which is this particular candle. This one right here. Okay, so we saw this. Okay, so we saw this breakout structure, and then we saw the zone. So what did we do? We put our, let me take this out. So we put our buy limits here, our buy limits here, and then stop loss below. Okay, where would have been our exit? Let's go back to our 1 hour time frame. So our exit, where we have exited this trade. Remember, we are saying that because of this change of character that we saw, we are looking at for price coming here. We are looking at for price to having reached this zone, to come into the zone and then probably look at for a sale. That's actually our focus. So our exit points in buying would be up to this particular zone. Okay, each price did tap into that zone. So this is the zone we are looking at for a sale. Okay, so having gotten this buy, so let's look out for the sale. So price has tapped into our main zone, 1 hour time frame. So let's go to a lower time frame, the 15-minute time frame, to look at for an entry. It could be 15-minute time frame, 5-minute time frame, or 10-minute time frame. So what did we see here? We see price came in, tapped into the zone, and we saw that there was liquidity grabs. This previous low was taken by this previous high was taken by this high, so there is liquidity grabs. And then we saw what else? We saw a breakout structure to the downside. Now this is the candle that caused the breakout structure. This candle right here caused that breakout structure. Okay, so this candle right here. So now we are looking at for shorts here. So we are looking at for something like this. Price to come in, tap in, and then sell. Okay, so we will put our sell limits here, stop loss above, of course. So this is what we're looking at for. So here will be our exit point. Let's go to our 1 hour time frame. So this will be our first exit point, first TP1. So we'll call this TP1. So this will be the TP1, take profit 1, and then probably take profit 2, and then if you want to write down, take profit 3. So that's actually what we are looking at for. Okay, this is the first swing low, second swing low, and then this is third swing low, which is actually a zone there. Alright, so this is how, but our target is this first zone. This is where we're targeting and exiting the trade. Okay, alright, so that's that for that. So that's actually what we are looking at for. So we'll wait and see how it's gonna play out. Okay, if it taps into our zone, we'll look at for a sell. Alright, so let's just wait for and see what the market is going to do. Let me take this one out. So let's wait and see what the market is going to do. So another quick one is volatility 50 index. Let's rush Let's first from higher time frame. Let me go to our daily time frame. So what do we see? We saw that volatility 50 has been on a downtrend. It has been on a downtrend. So let's go to 4 hours to see what's happened. So it's been on a downtrend. It's down, going down, going down, going down. But when price got here, when price got to this point, you see that there is a change. There was a change of current. Instead of retracing to create a new low, we saw it created this high retracement. It broke structure to the upper side. Retracement, broke structure, retracement, broke structure. So we saw a change of character. So price changed from bearish to being bullish. Okay. Now we saw a very significant zone here, and actually showing us how we took this particular trade. So now if we go down to our 2 hours time frame, our 2 hours time frame, let's take this up. Our 2 hours time frame, we saw that there is a break of structure here. There's a break of structure. So this is this break of structure, break of structure. So this break of structure to the upside caused by this particular zone, 2 hours zone. So if we go down to our 1 hour to refine that zone further, to refine this zone further, so we'll come down to our 1 hour time frame. Okay, so waited for price to come in to tap into this zone for us to take a buy. Okay, so price exactly did, it came in and tapped into our zone. After price tapped into our zone, the next thing we'll do is look at for our entry model. So let's go to our 15-minute time frame first. A 15-minute time frame actually sold entry in the 10 minutes time frame. So what did we see? We saw that price came in, tapped into our zone. After price tapped into our zone, after price came in and tapped into our zone, we saw that this break of structure, retracement into our zone, and then price moved. So it gave us an entry. So here is the break of structure caused by this zone. This previous high was taken by this particular zone. So price came in and tapped into this zone, and then it buy. So this is where we would have gotten our buy, our long position. Yeah, long position, and then stop loss of course below, and then where would have been our exit points. Coming down to 1 hour, where would have been our exit points. Our exit point is we saw that there is this supply zone, so we would have just exited the trade here. We've just exited the trade somewhere here we would have exited the trade here. Somewhere there that we would have exited the trade. Okay, so yeah, that's how we spotted that entry using our entry model. So that's that for that, guys. So please just go through the videos, just keep practicing. Okay, remember we must have a rule-based system to be profitable as a trader. You don't just trade anything, any moves you see on the charts. Okay, get a particular trading model, stick to it. Okay, a rule-based system means you there are certain criteria, there are certain things you see the market do that will warrant you to place a trade, to hit the button, whether it's the buy button or sell button. So that's very, very important. So guys, till we see you in our next video. Goodbye for